Welcome on into tonight's stream and happy Monday. We are seeing some really nice downside the past couple of days in the stock market, really ever since Thursday of last week. And in today's stream, we're going to kind of talk about what the heck is going on, what to expect, news, and then of course, we're going to dive into a nice little watch list here. So we want to look at some small caps. I also want to look at just some large caps as well to watch for the next couple of weeks in terms of what's strong, what's weak, where we could potentially see some opportunities. And the small cap market is certainly heating up, to say the least. So with that said, I'm going to pull up FinViz. We'll get that ready to go. We'll do a little scanner on FinViz. We'll run a little scan. And we'll get a good feel for, what's been going on. We've had some really nice gainers the past couple of days. Past couple of days, we've seen some really nice, couple 100% movers. I haven't been, paying attention. I just got into the new place. You guys can kind of see there's like nothing behind me at all yet. But hopefully we can kind of build this little room out eventually over time. But that's besides the point. So hope everyone's doing well. Merry Christmas to you guys as well. I've still got about a week or so until Christmas time. But we figured moving in during this weekend would be would make the most sense, right? It was a lot more stuff. We moved into our original apartment like 2.5 years ago in Austin, Texas. And it probably took us like 3 hours to get everything from the U-Haul up to the apartment. Not put away and whatever, but just like 3 hours. This time took maybe 3 more people than we had last time. I had my family come down, and then it took way longer than usual, or than it had, at least the last time. So you accumulate a lot of crap over the years, and it was only 2.5 years, but you don't realize it. So hopefully everyone is doing well. I do want to thank the sponsor of today's video one last time, at least for now. And then there shouldn't be any sponsors for a little bit, so you guys aren't get bored by the sponsors. But that is going to be Chart Prime. You guys can implement Chart Prime, add it to your charts. It's essentially like having automatic patterns detected on your charts without you having to do all the work. And so you can kind of predict reversals, downside opportunities based off of some of these patterns. Again, nothing is 100% like we always say, but it's useful. And I will leave a link to Chart Prime in the description box of today's video if you guys want to check it out, as well as their holiday promo code with that link down below. I'll mention them at the end, but I wanted to mention that now before we get on going. So here's a look at SPY. Let's take a peek. We'll go to futures in just 1 second to see if anything's moving over the after hours here. But we got Thursday, Friday, Monday. Boom, boom, boom. 3 nice red days on the break of this trend. So this trend essentially, once that trend broke, the 390 was kind of not really as important. It was more so a trend line, right? So that 390 went intraday back on Thursday, and then we ended up coming down, or we closed below 390 barely. We came down below a couple bucks, bounced back up, whatever. But then, boom, gap down into Friday, and then boom, red day today. It was green briefly in the morning, I think at one point, but red. I didn't do anything outside of one small position that I had today because I've been away and like moving my crap, so I haven't been following stuff. So I'm not gonna just like, in the past I would be like, oh, it's time to market's open, time to do something and make a dumb mistake. I had this little wedge right here that I charted out this afternoon while I was literally just setting up this room right now that's behind me. There's a ton of crap to the side you can't see, but there was just stuff everywhere. So I was setting it up and I was like, okay, this wedge looked pretty nice. And then I was like, okay, we're going to get a breakout the upside or downside. We've been super weak, so I just didn't really feel like playing an upside play. So I was like, who cares? Let's see if we get a downside break. Then we got this wick to break up over that little downtrend. When I saw that wick and then the candle was down into here, I was like, I'm taking a position right now. And I took a small position, about a half size that I usually take. And the stop loss was above that wick. And then I ended up taking profits somewhere into a new low of the day. So I took profits here as we got down under or around 380 or so on SPY. We ended up going a lot more, but that was all it was. So that was the only thing I did outside of that. I held that position from last week that I had a swing I mentioned on Saturday's video, I believe. I filmed that on Thursday, but I had that position. Let me see if I can pull up where I got out at. But I had that position at like a 250 average on TSM, I believe. It was TSM. It was TSM semiconductor play. And I was looking for 75 to hit. We ended up getting pretty close. We're getting pretty close now. But I held that overnight because we stayed below the $78 range on Thursday. So I held that one contract and I ended up selling at some point on Friday. That last contract. That was the only little swing I had. So it really didn't do too much. I made like a few extra bucks. But that was it. That was really it, to be honest. So Pretty quiet for me until like probably right now when I'm starting to, get stuff back in line and we can kind of look at some charts and get a better feel. But hopefully it makes sense. SPY daily looks pretty nasty. Yeah, let's go back to those dailies. Let's start with the daily charts, and then we can kind of back our way in from there. So daily chart-wise on SPY, to be honest, though, like the reality for me is we are coming into a seasonal time, a strong seasonally, or a seasonally strong time of year. So my concern is that I don't know if that necessarily means that, okay, we're just going to go whoop straight down from here. You know what I mean? There could be a little more choppiness, and I would imagine volume is going to start to slow down a little bit into the end of this week. And then, of course, next week is a holiday week. It's between Christmas and New Year's. So I would imagine volume is going to start to slow down. So I'm not really expecting a huge move, although it would be, I don't want to say crazy because I could see it, but it would be pretty interesting if we did get a massive dump through Christmas time and into next week, which is seasonally the Santa Claus rally, which we can talk about in a bit. It's seasonally the Santa Claus rally, which is the week between Christmas and New Year's. Okay, so in this case, I believe the market's open from Monday to Friday of next week. That is the Santa Claus rally. For people who are saying before or after, those are some of the strongest days we are in. Right now, from here to the end of the month, is one of the strongest seasonal periods of the year in general. But the Santa Claus rally time frame, right, technically or by definition, is that next week. So I could see us pictured I can picture a crazy dump, which would be like, oh my gosh, Santa Claus rally gets destroyed, and now here we go to the downside, and it's freaking people out because now it's seasonally a strong time of year, and now we're getting crushed. Now that could easily happen in my view and catch a lot of people by surprise. But I can also see a situation where volume comes in low and we just kind of do this. We're just like bouncing around for like a couple more weeks, the next 2 weeks, and then we kind of have more direction maybe into next year. I can see it. So that's kind of where my head's at. Not really necessarily expecting too much, but if we start seeing some aggressive downside, I wouldn't necessarily be surprised. Okay. The argument against that would be the VIX, I think. And so you take a look at the VIX. VIX had a push down to under 21 or down towards 2160 today. It closed at 2240. It's just kind of like in this weird spot. Right in here, the VIX has been trading a lot right around this range, around 2250. So I ended up taking a position. This might be dumb in looking back, but I ended up taking a position on SVIX, which is a way to short the VIX. The reason why is because with this downside that we've just seen, we're playing into the same exact thing that happened last time, right? Where we got past CPI and FOMC, and we were up way higher on the VIX. I believe the last time we had those two things come out in October. It was October. So it was about 2 months ago. What we have here is that we end up pushing higher before those events. Then the events happen and we get a dump. Means that, or it's just showing that we kind of get this uncertainty behind us. So I'm like, okay, kind of interesting. So the way I'm playing is that if the VIX gets up over 23, like around 24, right, which is like right here, I'm out. So it's a trade. It's technically a swing, but I'm just playing shares, so I can get out of it in the pre-market or after hours if I need to, or it's invalidated based off news. But here's SVIX. Chart looks completely different. If you look at this chart, and I think a lot of people look at these charts and they say to themselves, from more of a permeable bias, like you're more focused on look, I just like to look at uptrends and stuff like that. But of course you can play both sides, and there's inverse ETFs, so it doesn't really matter. But I look at this chart, I say to myself, well, to be honest, this looks pretty good. As long as we hold this 1340 area on SVIX, this looks like it wants to go higher. It looks like we got momentum to the upside, and this thing wants to go for technically an all-time high breakout, which this thing has only been trading for 8 months, 6 to 8 months. So I'm in SVIX if I'm in at a 1423 average, which is pretty much where it's at right now. And my stop loss is out here below this 1340, and my take profit is into a new high here up to about 15 to 16 plus. That's it. So pretty straightforward play. It's nothing big. It's a fairly small position. I'm not, no options, no time, limits on it. It's either going to do this or it's going to do this. Okay. I'm going to take profits into this, or I'm going to take profit, or I'm going to cut my loss into this, right? Or really ideally just cut my loss right here. Right. So that's it. Again, reason why is because VIX has been weak. VIX has been weak despite the market coming down a lot. Now, I could easily see a scenario where we dump off, but my gut on this situations tells me that we can see a lower volume and kind of a bounce back or a back fillage to some degree at some point. Back up, fill this gap back up, pop back up, maybe test that, upper 380s, 390, then reject back off to go lower, something along those lines if we're going to go lower. And especially with seasonality on your side, there's a lot of reasons to suspect the VIX may keep, falling off. And it's shown, a lot of weakness despite the market, coming down a lot, which is pretty impressive. So we'll see. Could be wrong. And if I'm wrong, and the stop loss is the stop loss. That's it. So that's the deal. Bailed on my short when I saw that climb on that move to the upside on SPY. Yeah, that wick was pretty telling, at least this afternoon. Kevin's in the house from Florida. S-Bucks puts, Starbucks puts, taking for a ride, ended up breaking even on it. Decent short on Amazon. You know what's funny? Let's look at those two charts. First, I want to pull up Walmart. That's my hedge in the Robinhood portfolio, which has actually had a green day, believe it or not, today. But essentially, I got the target that I was looking for on this. I'm going to hold on to this unless it starts to break back up over 145 on Walmart. So if we get back over here, I'm just going to take the profits on my short. It's a January 150 put that I have on Walmart. So I'm in the money by like $8 almost here. So it's essentially trading not one for one, but pretty close to one for one, meaning that, hey, every dollar that this thing drops, the option goes up about $1, more so intrinsic value. So if we keep getting destroyed, I have a little hedge for that, which has been good in the Robinhood portfolio because it's actually held up quite well despite the market, rolling back over the past couple of days. But that's my hedge. That's all I got for now. I do like an oil hedge, but I don't know. A short Exxon Mobil or something like that, or a short XLE. To be honest, I prefer something like that. But Starbucks has come back down. The only thing about Starbucks is that it's right on volume support, or it's trying to maybe hold a little volume support here around this 98. Is that what? Not much, to be honest. It's not that much, but around this 98 area, a little bit of volume support. But that's just really because of this consolidation right here. Which, if we start to lose that level, that 98 starts to go. We have more downside potentially here on Starbucks. Under 97 really ain't much volume until 93. At least that's been traded the past couple of months. So could be a nice clean move down to that 50 SMA at some point if we keep getting more downside market-wise. Let's check in on Amazon. I'm going to pull a bunch of charts up and we're just going to kind of run through them. So I want to do that. And then I also want to look at small caps at the end. So stay tuned for that. But we'll run some small caps at the end because they've been playing pretty well. So look at this Amazon right here. Check this out. This is pretty impressive in terms of this Amazon move. So Amazon, weak as hell, just broke to a new 52-week low. My goodness, on Amazon today. Let me pull this back up so you guys can see the price that we're talking about. New 52-week low, closed under $85, came down to $84.51 today at one point and then bounced a bit. But look at this volume. This volume has been pretty interesting. Very elevated volume the past 2 months or so on Amazon now. And that's just been, aggressive selling, really, to be honest, is what it's been. So this thing is stair-stepping its way down. Next shot to the downside looks like, in my view here, looks like around $81. Why is that $81 in blue? Let's see if I can zoom out and find out why. Okay, that is because you had the COVID lows. COVID lows are $81 roughly. Now it's a split adjusted price on Amazon because they had a split, but that's why. So COVID low, we're approaching. We can be very well talking about COVID lows this week if we keep getting downside on Amazon. COVID lows. Jeez. So that's weak as hell. Apple looks pretty good. Just notice it's interesting. Let's see what Apple. Where is she at here? Yeah, it's at an interesting spot. It really is. Now, I have seen a bunch of charts on Apple. Everyone likes to draw their charts in and then make it to fit their, their thesis or their narrative. But I've seen some charts on Apple, and people were like, "Oh, look at this uptrend, right? It broke, right? It finally broke." And that was, what was this, back here in May. And then it came back up, broke above that trend line. Now it's back down. But what's really more important in my view is more so the horizontal support. So for me right now, in terms of this year, we're coming down towards this yearly support. Really this past 6 to 8 months. More so 6 months. We've had some nice support down on Apple right around this range. So from about it dipped below 130 briefly. But the 130 level is pretty key. So if we get some bounces, wouldn't be surprised to see Apple bounce back up. Now, Apple at the same time has this little downtrend right here. We can extend off. This is the weekly chart, by the way. So each of these candlesticks is 1 week. Here's a downtrend. It's extending to the downside right here. If we get a bounce and we hold this year's lows, that could be back up towards around 145, 146 in terms of that trend line. So we'll see if we get an attempt to that level on Apple. But we're getting to some crucial time, right? I'm really, because this thing has the look where like, if this thing starts to crack down below that 130, I mean, we could start to see this thing unravel, especially if the market gets weak. And really, this is going to be interesting if we ever have an attempt down into this range, maybe on the next bigger pull for the market. If we were to go to new lows, I wouldn't be surprised if Apple is pretty weak along that way. Was super strong, that's not the case because this is approaching the yearly lows, whereas SPY's not. I mean, SPY is getting there. It's getting closer, obviously, but it's not as close as Apple, right? So look at SPY. SPY still got a good way to go. Like SPY has to come down another $30, right, to give us a new low on the year. Apple's got to go a couple bucks, and percentage-wise, SPY's got a longer way to go than Apple, at least as of now. So we'll see. We shall see. Lulu for the same 200 moving average breakdown play. Yeah, we were looking at Lulu. I feel like what was that? Last week or past 2 weeks, as I was looking at this, and I'm saying to myself, I'm gonna like this a lot for a possible short into next year, and just to be keeping it on the radar. But ever since that move down that we had off the earnings, was that back on December 8th, two Thursdays ago or a week and a half ago? This thing has been pretty weak. Has been weak as hell, really. Under this 325 volume, looks like it could go down to 310-ish. Pretty clean move down there. That could be one to watch for tomorrow, maybe for continuation to the downside, down towards like 310 to 309. There we say in the next couple of days. But big picture, we were looking at this as more so just kind of like that hedge, a portfolio hedge play, more so into like next year and beyond, earnings-wise, recession-wise, things like that. So we'll see. Ideally, the higher the better to take it short or to play, some maybe 2024 puts, in the money puts. They're going to be expensive, right? But if you were to hedge an entire portfolio with a position or something like that, it might not be a terrible idea. It depends how you want to play it. But that's what we're thinking about. Target, I see TGT coming in. Bear flag breakdown. Yeah, I mean, this thing, we had this level right here, and it broke down below this 150, was that like 150-ish area trend line. And this has been one that I have been eyeing up in the past, but I think this could offer some really clean downside. So it's going to be, I think these are two that are going to be decent watch list plays just for, continuous downside watch in terms of when we have weekdays in the market, right? These are decent ones to watch for downside. I have that one on the list here too. TGT. We know Lulu, I got that listed out. Netflix is another one that I want to mention too. Let's see. Where's my Netflix? Here it is. Came down a good bit, hit that gap fill pretty much right on. Let's go back to that 1 year chart. Pretty much hit the gap fill right on, and then it's sitting right above the 50 SMA. That's my only concern, but if you look in and zoom in a little bit closer, why this interests me, indicators aside, we're like teetering underneath some pretty substantial volume. So like under today's lows, like really under 186, under 185. Yeah, there's 50 SMA support here at like 183.50. So that's my concern. But there's not much volume down towards like the 270. I'm saying it's 285, right? 286 down towards 275. So that could be something to watch in terms of Netflix for downside. And that chart doesn't look too strong either, right? This looks like this has that look of like big move down, consolidate for a couple of days, and then continuation move down is what that looks like. Of course, no guarantees. And of course, the market can bounce back tomorrow, and this could bounce right back. But not surprising that we've had some nice downside now on Netflix after what it did really this past 6 months. Rallied back from the lows around 160 all the way back up to 328 or 330, I think 332. Filled the gap all the way up and then is now getting, pushed back to the downside. It's been relatively strong. Can't deny that the past 2-3 months, but even more than that, past 6 months really. But it's starting to show some weakness, at least in the short term. Can't wait to close my Exis put so I can buy some Enphase. Let's see. EXAS. Exact Sciences. This thing popped up hard. You know what's been funny? We got to look at some biotechs. That's some pretty hard pretty nice volume there, pretty big volume, but pretty much selling off all day, which this has the look of, to me, of course, anything can happen, but this has the look of like this thing wants to come right back down to where it was. After these past 2 days, Friday and today, of course, I'm sure the market had an effect on that, but that looks like this thing wants to come right back down to 45 quickly. And if it gets down there fast, I mean, I would think this is going to probably go. This is going to go. Of course, market, would ideally need to cooperate to help that, but this could come down more for sure. So I see it. I don't know if you invert your charts to get more data, but it's very actionable data. Right click on the panel in front of your screen, prices on trade. Yeah, I tend to not necessarily invert them too much, but it's not a bad look. I don't seem to. I'm not necessarily someone who like only likes to look at the upside play. Like I can kind of see from my, I guess, perspective. I don't have a problem seeing downside or seeing opportunities to downside in terms of needing to flip them. But it's useful, I think, for a lot of people who like are more conditioned to just see uptrends and say that looks good, that looks bad, that's a bull flag, that's a trend line, bounce, right? Lulu 200. Let me go back to that daily chart on Lulu for that 200 period moving average breakdown. Yeah, right under that. That looks juicy for a move down to 310. It's useful for breakdowns in terms of like looking at for like it to be a breakout, right, for an invert. And breakups. Can I ask which volume? It's the volume profile. I use the, what is it called? The VRVP visible range volume profile. Quick shot of the settings. Here's the inputs that I have. And then here is the style that I use. I just kind of changed the colors and stuff to make it all white. But I don't think about, after adjusting a couple things to my liking, I keep it pretty much, all I want to know is where the most volume's been at what price points. And that's really it. Nothing crazy, just keeping it simple, that's it. All right, let's see. Here's the invert. Let me go back to that target play. Here's the invert. I mean, it's definitely not a bad idea. So look at that target, right? So in terms of upside, right, this thing broke that downtrend and now it's going higher. This is just an inverted chart. So if you look at like a stock like Lulu, right, like look at all these stocks that you like for, let's say, shorts, do they look good for longs? Yeah, I mean, that's breaking out to the upside. It's getting up. It's trying to push over 315 in terms of Lulu, right? And it's funny because the price scale adjusts. So now up is going down. So if Lulu gets over 315, right, this has a juicy little volume gap to about 308, 309. So yeah, these look good. I don't necessarily think it's useful. I don't necessarily think that I need to look at that, but if you're someone who's comes from more of a bullish bias only, and you can't see the downside the same as you can see upside, maybe I can't as well sometimes. I don't know. I just don't think that I'm necessarily like terrible at that, and I only look at the upside. But I like the ability to just kind of jump back and forth just to kind of confirm, like, because you probably have, especially the past couple of years, you've probably seen more bullish charts than bearish charts, right? So you have so much more experience at what stuff looks like when it's about to go for more, right? Or when it's about to break out, right? Or break down, right? I guess in this case, you more so experience breaking out. August in the house. Let's see. I want to pull up. So those are the couple names. Let's look at Qs, look at IWM, the 10-year. Let's pull these things up really quick. So we look at the VIX. Look at the 10-year. Here's the 10-year. 10-year is holding up here. It's trying to build higher lows around that 3.5. It actually came down to 3.4%, but it's bouncing back up. Nothing like a super aggressive. I wouldn't be surprised if it comes up and dare it test 4. I don't know. Who knows? I wouldn't be surprised. It's been weak, but we'll see if it tests 4 and starts to push higher. I don't think I'm worried about this until it gets over 4, but we'll see what the 10-year yield wants to do. It's starting to show some signs of building a nice little base here. Dollar, DXY, kind of in this little this downtrending channel here. It's trying to break out, which could give us a nice little pop, which would probably mean that you see some precious metal names getting hit pretty hard. So you can probably look at some of the metal names as maybe some shorts for some nice pullbacks. Let's see. GDX. Let's see if I can pull up like gold miners. Yeah, I mean, like GDX right here, like is breaking down. Right, this thing looks like it wants to come down. You know, at least right now, doesn't look too great on GDX. Come down, maybe down towards like 26. Who knows on that thing? Let's look at SLV. SLV, same thing. This thing, I mean, these could come down. So these could be, they could be even some nice little hedges too. You can play some inverse ETFs on some of these guys and some gold and silver names, you know, to hedge yourself. So if the dollar was to break out of that little range, if the dollar breaks out of this consolidation right here, or this downtrend, this could go a day or two, maybe more. I mean, it could be a bigger move up, right? But it could give us a nice little pop, and then, you know, to play off of that hedge of holding some of those positions might not be a bad idea. It's just nice for confirmation. Yeah, no, I think 100%. I found log scale more useful as of late. Yeah, I generally keep it set to log. Generally, considering the massive moves in 2020, yeah. Microsoft and then DNUT. Let's take a look at Microsoft. All right, let's see. Yeah, it doesn't look great. Although on Microsoft, right, and that big move down the past like week is not great. Although you're coming down to some nice, you know, dip buy zones from the past like month, around the upper 230s. So that's just a little bit sketch in terms of immediately trying to short. However, though, if we start to come down here on Microsoft I'm going to put an alert there. I'm going to put an alert under like 238 just so that I'm alerted to it tomorrow or whatever day it happens. If we cross down, I want to see a cross down under 238. That's going to get down towards the low end of this box, which happens to come down to like 237.50, whatever it is. But there is a gap on Microsoft right here from 235 down into this like 220s. So like this could be a nice juicy, you know, glide to the downside on Microsoft. So if we get down there, that could be nice. So this could be setting up for a big downside here. I'm not, no need to rush, right? But could be setting up for some downside. I think a good one, like a good example of that is TSM, right? We go back to TSM. What it did was kind of the same thing. Like it kind of had that look a couple days back, you know, about a week or two back, right? It was like sitting right here. And then it held. It just held that level, then it bounced. But it didn't make a new high. It stayed in that range. It stayed in the consolidation range. And then eventually now it got downside. So now you're downside, but it just took an extra, like, you know, couple of days. So be careful about the initial, right, Microsoft idea. However, if we get a little bit of a bounce like next day or two on SPY, you know, comes back up, does something like this, then maybe next week or the week after that, and maybe next year, this is what you get, and then you're there to play it, and then you have a much better downside trade, and you're not jumping the gun a little bit. That's just kind of my take on it. It's a pretty big aggressive volume, selling volume on Friday, it seems like. But that was a lot of options expiring, so don't really care too much necessarily. DXY broke out in my chart. Yeah, my lines don't necessarily need to be aren't, like, you know, perfect. Just a general idea, but I wouldn't be surprised if we get more extension to the upside now on DXY. Short TLT anticipating some money flow back in USD. I wouldn't be surprised. It's not a bad idea. I mean, looking at TLT's chart, yeah, I wouldn't be surprised. And again, like we kind of said with some of these things, like yes, if you were in along this ride, you know, great, you had a lot of good days the past like month and a half or month, but this, of course, could go to new lows, right? Anything can happen. I would be pretty surprised if it does, but again, I'm not, you know, whatever. It is what it is. It's the market. It can do whatever you know. You can sit there and say like, oh yeah, I think this is going to happen, and then, you know, add. I've been there, lost a lot of money doing it, so I'm just not interested in that necessarily. But this again, right, could totally do this and then end up next year doing this, you know. For all we care, it just might take 6 months to play out. So, you know, it needs a pullback. This is a big move from, you know, where it was down around 91 to 110. That's for TLT. Now, of course, TLT has had some crazy moves to the downside the past year and a half, 2 years, right? More really just like past a year, really, I would say. The past year since 2020. It's had some pretty big downside. So, you know, a move back to 120 is not even, to be honest, like, that impressive in my head, right? In my mind, right? TLT to 120. Okay, cool, right? That's back up to like right here. back where it was like late spring, early summer. Like that's all I'm kind of looking for on like the TLT. If it gets up to there, like I'll be taking profits on my what do I have in my Robinhood portfolio? TMF. But in terms of leaving that, I'm just going to sell covered calls and play it out. I think I sold some shares along the way back up after, I had some dip buys in the 7s or 8s, and I sold some. Maybe I'll buy some more. Maybe. We'll see. It's like kind of like that recession hedge almost. We'll see. DBTX in a buy zone low flow. It's one of those names I haven't heard in a while or haven't seen in a while, but I do want to start moving our way over to small caps because I think there's going to be a lot of value there. DBTX, my goodness, what a dump and a half this thing just had. Jeez, that looks pretty weird. Like that is an acceleration of downside. Now it's hit a new low. I'm going to add this to the watch list, not because I'm interested right now, but I want to see what happens if it firms up. If it firms up, at some point, that could be interesting because right now you're kind of in this like washout mode. Right now you're just in absolute washout free fall mode. So it can go a lot more. Just don't get me wrong. In the meantime, but back to these smalls, right? Let's look at some of these small caps. Check this out. JNCE. Look at this stock, guys. I mean, we've been watching. Like we had originally scanned for this. We found it on a scan like 2 weeks ago, or maybe it was 2 weeks ago. But what are we seeing? We are seeing kind of a similar look, not the same look, definitely not the same look, but kind of a similar look to what happened with Grill before it went like 200%. Just without even necessarily a PR, it was kind of a slow grind of 200%. Although it was a 2 week span and it went crazy, but it's actually still holding up, believe it or not, in the 80s. This thing came down, but look at this volume. Is what I'm interested in. Like this is me interested in. These plays have been kind of panning out pretty decent the past couple of weeks. So what I'm thinking about this one is tossing X percent of the portfolio in for a swing. Small percent, nothing crazy, nothing like I used to do. A small percentage of the portfolio in for a swing here because this volume is telling and it's catching some bids. We're getting some higher lows here after what looked to be a washout. This looked to be a washout period. We had elevated volume, stops getting hit, going to lower lows, yada, yada. I believe we look at the earnings report, the last earnings. They've got some cash. I think, if I recall correctly. If not, we can double check that, or you should double check that before you ever enter the position, and that's what I would do if I enter it tomorrow, for example. I don't know if I will, but if I do, I will be double checking the cash and the latest earnings and stuff like that to make sure that we're okay here. But recently fell below a buck. So in threats of delisting in terms of maintaining minimum bid requirements are not really in the cards right now. It would need to be under that level for a lot longer, at least like 6 months or whatever before they get the notices from the NASDAQ and whatever. So I'm not worried there, but that chart, that volume definitely has me interested because, we're pulling, millions of shares per day. We're talking from December 9th through last Friday through the 16th. About a week where we averaged about almost 2 million shares a day traded, almost, which we hadn't been nowhere near. You're talking about go back this year, highest day, you're getting barely a million, and that's on a really crazy high day. Right, most of the time you're talking about 100K, 200K shares. So notable volume to the upside there. Watch that, and then I think the stop loss would be here under the lows. So. Is it the best risk reward? Probably not. I'm sure you can find better risk rewards out there than something like this. But does it make sense based off what we've been seeing pattern-wise in the market? I think so. So a stop loss under 57, and then a 2-to-1 risk reward means you got to get a target of, drum roll please, just about a buck, a little over a buck from here, from where it's at right now, from essentially 71, 72. So I think 50 SMA is a decent target to have in mind. So that's at 140. That will come down over time, maybe like 125. Could be in the cards. It could go more, it can go less. Who knows? It's a biotech that's got some good volume. It's a relatively low float. I like it. Yeah, in terms of JNC doesn't look too bad. If you're like, the accumulation is more so what I'm looking at, and that's more so what I like to do in terms of these smalls. And the reason why is, look at a couple of these past names. I think I deleted a couple off my watch list, but ELYS, not the best looking chart, but you saw this now. Of course, you're skewed by the crazy high volume day on last Wednesday, where it traded 22 million shares. But we had these bigger volume bars down here, right, on the flush out, right, hitting stops and whatever. Then it started to catch some people who are snagging shares, and then it had this massive day where the thing goes from 14 cents to 38, right? The thing goes 100+% in a day on a spike. That, like, you're playing for this. This is getting back. This is like really reminding me a lot of 2019, because this is how the charts were looking, right? This is how maybe not this aggressive to the downside, but we had a lot of these stocks that you broaden the charts out and they were just horribly in downtrends, right? No spikes, just getting destroyed for months. Then all of a sudden, there's volume. They catch a bid. They're holding support kind of out of nowhere. And that was the sign, okay, let me grab something here, right? You got a lot of potential upside. It could spike. And it was always sell the spike back then, right? The thing goes 30% plus. Wash your hands, move on, get out, right? If you're in. So this has been going for more than that. And the potential upside, especially this time of year, is a hot time for these stocks, is pretty substantial given the amount of downside they've been seeing. So we'll see. Not all charts look nice, definitely not. Let's see what else I have. SDC Smile Direct getting crushed. So a lot of these guys I have on my watch list because I could see the potential upside, but I'm just waiting for that signal of that accumulation to get in. So like a JNC, that's what I'm waiting for, and we're getting it, right? We're getting that. So like out of this list, that's my favorite name. Out of just this random list that I have, there's plenty more out there. JSPR was another one that I've been watching as well. Kind of a wonkier chart. It just made a new low, kind of, I guess, yesterday or Friday and today. It's been teasing on that level, but however, there's some higher volume that's been coming in, especially after the big washout to the downside that we just got. So there's been some higher volume. If this continues, I would like to see that. Maybe this is a play as long as it holds 50 cents, psychological support, for a risk of 50 cents for a move, back up to 80, 85 plus, right? Or spike, sell a spike, no matter what the spike is. So that's an idea. Outside of that, AYRO looks pretty bad. It's not, they've got cash, although we just haven't seen the volume, like accumulation that I want to see necessarily on this yet. So it's getting some better volume now, but it's also on the sell-off. Stop loss is getting hit, going to new lows. That's kind of part of it. Nile's piece of crap. I don't think it's even worth touching that thing, especially with Bitcoin right now. VISL, look at VISL, had some good moves to the up to the past 2 days, believe it or not. Not as easy of a chart I guess to kind of figure out. It's got some upside range for sure, but some better volume there. It's just made some pretty big moves. Not really super interested in that. NVOS hasn't had the volume that I want to see, relative to the past like month or two. We talked about ELAS, Grill's, who knows what this thing wants to do, but the volume's been awesome, right, on that move up. But essentially, right, you had that move to new lows, caught bids, caught some stop losses, and the volume came in and it went higher. And that's what you're looking for, right? Same pattern on some of these. Now, there was one from today, if I can find it, in the after hours. Let's see if I can pull it up. A monster, ICCM. You guys see this thing. Hit 75 cents today. This is back on Webull. Hit 75 cents today, popped to 11.84 in the after hours. Absolutely insane. That's just nutty. So from that to from low to high today, you're talking about a 1,400% move. And to be honest, it happened in like 2 hours, 3 hours. So ICCM, I want to pull this guy up really quick back over here on TradingView. Why I mention it is because this should be illegal. Is almost how it feels right now. It's a super thinly traded stock, not much volume right the past couple of months anyway, right? Except this random spike back on the 8th of November. But what happened today? Like if you're looking at the daily chart, the thing was trading, on average up around $1, a little over $1. Then it comes down, goes to, what is this? It goes down to 75 cents. Like that's a disgusting pullback today, right? It has a pullback of 25% today at one point. Someone 100%, like this type of manipulation, like we talk about all the Atlas crap. Those guys are absolute pieces of trash for what they did, right? And not surprising, to be honest, but absolute like scum. But like stuff like this happens all the time, right? Maybe there's a reason why that you can go find, easily, but to be honest, most of the time you can't find a reason. So this is manipulation, market makers, whatever. Manipulation of this thing because someone wanted some cheap shares all you got to do, drop this thing under $1, hit some stop losses down in the upper 90s, mid 90s, boom, the thing, because it's so low volume, the thing flushes out down to 75, and it's an all-you-can-eat buffet under 90 cents. And then who knew that it was going to spike in the after hours? However, somebody did, because now the thing goes 1,000%. So somebody was able to grab some cheap shares down there and had 1,000% gain or a chunk of that move. But we're looking for like that's why it's as much as it sucks in small cap land, it's not the same as large caps in terms of the support resistance levels, because there's a lot more manipulation, a lot more BS. And so if you're looking for these swing, that's why I love the bottom swings. And I think we're getting back to kind of a much better environment for them in terms of like being able to kind of spot some of the signs. Now, no guarantees this stuff works, right? Every time it's not going to work. But if you can spot the signs and you have, a couple 100% winners, dare I say 200% winners, you catch a piece of these moves, and then you have on the worst case scenario for some stops, you lose 25% on a couple plays, here and there, right? It's not the end of the world. The risk reward is so skewed to the upside when you're playing these bottom names that give you a sign of accumulation, give you some other signs, whether that's pipeline and all that jazz. I mean, there's something to be had, I think, on some of these names, but that manipulation is like, blows my mind how that's legal, but it happens. It happens, whether you like it or not. So it's tough to play these things because they're going to new lows sometimes, and many times they could be just traps, and they can end up being what perhaps the big boys some cheap shares. Full-time risk manager. I'm sorry, I missed a bunch of comments. Full-time risk manager, part-time trader. You don't want to invest in any company that's dumped that much. Long waiting until recovery. Small cap. Yeah, the thing about these things, though, is that these are absolutely not investments, right? They're worth, in my experience, right? They're worth. This is what I got in. This is 2019. This is like flashback to 2019. It was like dog shit looking charts. Like charts look horrible, but it doesn't. The charts look horrible, but there's always manipulation. There's ways that these things get pumped, and especially times of years where things heat up, which we're kind of seeing right now, that there's opportunity, right? And so you're not taking a fat chunk of change and sitting here and saying, I'm going to diamond hand, ICCM until it goes to 10 because I really believe in the management. Like, no, you freaking don't. No, you don't. Maybe you can spot a diamond in the rough, but the reality of these penny stocks and these small caps is that like 99% of these things are trash. Like, they're going into the trash, and they shouldn't be touched. And they can be traded, but they should not be held realistically. ASAP is a crap show. I think juice for a pump. Let's take a look. Let's just jump through some of these names. And then I want to run a quick little scan and see if there's something else that we got. Yeah, that's another one. Like this thing, recent split right here. What is this? Let's see what the deets. A 1 for 20 split right there. This thing is back now at 50, trying to hang around that 40 to 50 cent range. But there's been elevated volume. Now, a lot is come post-split. So, but I see what you mean. This thing could easily pump to 150 and do, a couple 100%, no problem, and then just go right back down. Like that's, it's done it before. It's done made big moves before. Let's see. UICH look promising. Let's take a look. UIHC. I see. HC. Yeah, I mean, it's already getting some volume, but the volume keeps holding. If it holds around this 50 cent area, not a bad idea. It's not a bad look, right? However, of course, like it's kind of like, it reminds me of Grill. It's kind of in this weird, consolidation from like 50 to 60 cents off of like still relatively low volume. But if it holds 50, this thing can totally go for more. CLIR, I think you've mentioned CLIR. Let's take a look at that chart again. I think I remember that name a couple times. Yeah, that's getting some, at least a little bit of hints after that last earnings, a little bit of hints of higher relative volume as of late, down around that 50-ish. You're seeing a lot of similarities. What are we seeing? Around 50 cents. A lot of these stocks are kind of like hovering around that 50-ish cents area. Last time you looked at MVIS, can't remember the last time. I do remember the hype. Oh, MVIS was nuts. That was like the most insane, peak of the peak. Just hit a new low. That's hilarious. Now we look at it. Peak of the peak, euphoric, small cap trading was back in MVIS was going to, $25 from being at 20 cents back in pandemic time. That chart looks horrible though. Like that chart on new lows, this thing could easily be down at sub $2, this week for all we know, the way this thing looks. Microvision. Yeah, it is. I'm sure there's a lot of bag holders who are still in, but HKD at its IPO. HKD was one of those monsters, right? Fairly recently. Yeah. I mean, it could probably catch something down around this price. Who knows? But my guess is it's gonna flush that level. My guess. We'll see. But that thing was one that went to $2,500 from 13. Insanity. Lian. Little pop in volume right there. Some volume, 20%. Yeah, that's my only concern. Is like after a 20% day, it totally has the look. Like if I was already in, I would probably be holding some shares for sure. I wouldn't have sold everything, but it has the look where I could go for more. But at the same time, is it a good entry right now? Probably not. Definitely not for a swing. If you're day trade focused and it's got volume and momentum, maybe. But yeah, I wouldn't be sitting here saying this is going to be a great swing entry necessarily right off of a big day. Thoughts on PayPal? Let's look at PayPal and then we can pull up. I want to pull up some little scans here. PayPal down towards lows. It looks like this is not a bad chart, to be honest, for a short, right? It doesn't look too shabby in terms of the continuation to the downside. This thing has been weak as hell. You got earnings coming up in February. Okay, so you got some time till that hits. Let's go to this auto. Let's adjust this chart back to auto. Okay. Low of the year is at 67.58. So you're about $1.50 until low of the year. That could flush to lows. That could easily flush to lows. It's been weak as hell. So my thoughts are not great. Although, would you want to short a stock at its lows? Probably not. Outside of momentum day trades, right, or short-term swings, right? I wouldn't be sitting here saying I'm going to short PayPal and hold that short for a year. That's not. I mean, who the hell freaking knows? And that's not, in my view, it's not a great idea. But for short-term moves, I would think that if the market stays weak, and this thing flushes down to new lows, it's got maybe down towards $60 next, psychological area. Let's see if we can zoom out on the weekly chart. Oh yeah, that does not look good. That does not look good because what you now are approaching or what you're dealing with is a level on PayPal that had been a prior support back here in 2017. Sorry, 2017 now. That we came down to around the $70 area, just below, and held. If it goes and we have clean breaks to the downside and we stay below $70, there is not much volume on the weekly chart now until you get down towards the lower 40s, believe it or not. Now, that's a long way to go. I would imagine the market needs to go to new lows, S&P has to go to new lows, all that stuff has to happen for that to be potentially possible, but I wouldn't be surprised if we kind of bleed out that way if the market stays weak. Yeah, that weekly does not look good. I mean, again, it's at support, kind of teetering on support right now, but it does not look good. I will say that for sure. All right, let's see if we can run a quick scan. Let's do 10 minutes and see how that goes. Screener, let's go to market cap. I want to look at micros, so under a $300 million market cap. So we're looking for super cheapies. Float, I want to see, ideally, I want under 50 million float. The lower the better here. I mean, maybe we can even go lower than that, but let's start there and see how much we get. Sector, I would have to lean towards healthcare bios right now, but I'm going to leave that alone for now, unless we need to kind of refine this. Relative volume, let's go over a 2. You could even go higher than that. Let's see how this looks. This is giving us a lot, okay? Now let's look at price points under $5. How much is that cleared out? Still got eight pages of charts, 154 stocks. It's a lot of stocks. So maybe we can adjust this price to under $1. Let's go under $1. These have been the ones that have been run the most. Now we got 62 tickers. Okay, cool. Let's see if we can get anything else. Let's see. Maybe we go sector. Maybe let's go back to under 5. Let's go back to under 5. Let's go to sector. Let's go to healthcare. Let's just do healthcare, right? That's it. Let's go healthcare. So that's 76 tickers. Still a lot of tickers. I would probably sort this by cheapers first. Let's go under 1. Under 1, yeah, then we only got 35. But there's a good way to start. Here we go. Let's go biotech. So we're looking at biotechs, healthcare plays, research companies, and let's look at some charts. So what we're looking for, right, is big moves down, and then what I want to see is it trying to build a base and then some high volume, like higher volume coming in. And ACHL starts to kind of get me interested. Let's look at that chart. ACHL. Oh, yeah. I mean, this is the week. Let's go to the daily chart. I mean, look at this. That's on the watch list immediately because of this volume. I mean, something is up. Now, of course, it's in free fall mode. It could go a lot lower. But what we're looking for is we got the volume. That's piece number 1. Number 2 is let's try to build a base. Let's find a level that buyers are coming in and we're holding a level, right? Maybe it's 85 cents. Maybe it's 75. Maybe it's 50 cents. I don't know. But we're looking for it to hold a level, right? After a big move down, volume coming in, stop losses getting triggered, somebody is scooping these shares up. And I want to be a part of that big money play eventually, right? If you can time it right and get an entry. So let's add that to the watch list. I like that. And again, before you ever enter these stocks, what you want to do is you want to go back to them right here, pull up their name, pull up their chart. And what you want to do is you ideally want to check how much cash they got. Cash per share could be telling. So it's telling me there's a lot of cash here because they got about 40 million shares outstanding. And you're telling me they got $3.4 in cash per share. That's telling me that they got, over 100 million cash. Is that accurate? Let's confirm that by the latest earnings report. Ideally, that's what you want to do. So let's see if we can find it. Here it is, November 8th. They report their latest earnings, quarter 3 earnings. Let's see if I can extend this page. Cash, here we go. $180 million in cash. Now, they've burned through a lot of cash in about, 9 months. So tells you that they're burning through it. But that's interesting. Operating and investing activities, $40 million in exchange impact. They anticipate, this is key, in terms of offering at risk, lowers the risk. Of course, companies can say whatever they want to say just so that you can, just so that they can get you to invest. And in theory, we're not investing in this crap. We're just trading this thing, right? And we're putting ourselves in what the best risk reward is. So if I'm going to go into a stock that has $0 in cash, is in, massive debt, is burning through, millions of dollars of cash a quarter or, whatever, what's my offering risk? What's my downside for, potential delistings and bankruptcies? Like, it's so much higher. A company's got $180 million of cash. Like, it's going to take them a while to bleed through that. And of course, they bled through almost $100 million in cash in 9 months. But am I going to hold this for 9 months? No. You know what I mean? So that's the whole point. They anticipate that its cash and cash equivalents are sufficient to fund its operations into the second quarter of 2025, including the completion of ongoing phase 1 and 2A clinical trials. And this is where you've got catalysts lining up, right? You've got cash to fund you through 2025. Like, this is where you got a nice play. Now let's wait. You watch. Volume's coming in. It's now dropping under $1 just recently. So delisting risks are pretty low as of now. Obviously anything could happen, but now we have something juicy here. So I like that one a lot based off that volume. So let's see what happens, but that could be one to keep an eye on. Let's see if it builds a base. Let's see. Small position on VORB, looking for a 10% trade. I'm looking at, let's take a look. I mean, to be honest, when it comes to smalls, now everyone can play what they want to play. This could easily drop a lot more on VORB, right? For sure. But when it comes to some of these small caps, the reality is, in the way I think it works best is, in terms of your downside risk, in terms of a leash for a stop loss, you could be pretty lenient. It's not going to be like, 5% amount for the most part. It's you got to be, 10, 15, 20, sometimes more than 20% downside risk, but your upside is 50, 60, sometimes 100%, depending upon the charts and the setups. And how low float is it? Is it super low float? If it's a low float, it can go, like we just saw on that stock, ICC, what is it? ICC something? ICCM, in the after hours goes from, 74, it closed at 93, and then it goes to $11. I mean, it's a low float. It's a $10 million float. That's what Weeble's telling me. A free float of 10.5 million. These low floats have crazy potential for these upside moves. And that's why the risk of 25% sometimes, as crazy as it sounds, like, oh, it's a lot. Well, you don't size in super heavy, but the upside is 100% sometimes or more, right? So that's why it's a different style of trading them, right? You have to have I think a bigger leash on the downside because you're going to get stopped very easily off a very low volume, stop loss hunts, stuff like that. So that's the one, right? This is the first one. It's funny. It was the first stock on the list. And then it's just, whoa, glaringly, telling me there's some volume here. For example, here's another one, ALLR. The thing just spiked up to 130, 140s. If I'm seeing this correctly right here, I'm blocking it. Jeez. Here you go. So here's the chart. It spiked up to like this 140 area off of high volume. It came right back down. The thing went well over 100%. If the thing just spiked, not interested. Why? What happened back here in August or September, right? Thing spikes 100%, came right back down, held around for a bit, maybe had a bounce, and then ended up going to new lows. So after a big spike, it's not interesting to me. It's just not. So I like a clean, fresh name that hasn't pumped yet, hasn't spiked. Nice and quiet. Nice and quiet is what you want to see. Is what I want to see. Maybe you don't, but that's what I want to see. A lot of these other names are got some decent relative volume, but they are just, the charts are not holding at all now. So this is another one. Look at this, CFRX, a 10-cent stock. Got some good volume as of late, but not too much cash per share. I'm going to move on. And there's of course, some of these will go, some of these won't. But there's a lot more that came from, I think, out there right now. And then the back tests could be good too. HTGM, look at this guy. Let me get myself off again. Boom. HTGM, funny enough, look at this. Thing goes from 20 cents to almost $2 a couple weeks ago. Guess what? Where did it come down to? 50 SMA, right around 50 cents. Psychological support came down, popped 30 cents off that. Boom. So sometimes you can wait for backside after some big moves. If you miss the big move and the stock comes back down, it starts to hold that 50 SMA, hold a key level, hold a psychological area. It's building higher lows or just kind of holding, not breaking below. It could be worth a swing or worth a trade back to the upside. Okay. So we've got one that I like. This one right here, LABP. Interesting. That doesn't look too shabby. Let's go back here. LABP. Check this out. Biopharma. Look at this. Now, of course, it's up a lot off the lows. Like, it's up like 100% as it is now, to be honest. So I'm not really a massive fan just right now, but look at that volume. It's pretty telling. That volume was surging the past couple of days. If you had a chance to get this thing sub 30 cents, which you technically did past like a week or so, a couple of times, for if you bid, you're up huge already as of now. So that's another example of that good volume that we're looking for. All right, let's see. Next on the list. NEPT. LHDX. Check this one out. Let's check this one out. LHDX. Check this guy out here. New low just hit today, but it's got that look, right, where you have a breakdown day, and a lot of these names have had these breakdown days the past couple of months. It has a breakdown, day or week, right, with elevated volume. Okay, volume comes in. So someone bought those shares, and stop losses were probably hit as well on that big day after the earnings. Now you go to new lows. Now you're like, if you bought the dip post earnings, right? These dip buyers right here, you're like, oh man, we're going up, we're bouncing, right? You bought the dip at the 30 cents, it pops back up to 50. If you didn't take profits, you're like, oh man, here we go. And now you're bleeding back out. And what happened just here? He broke down below those new lows, and now you're getting more aggressive downside moves. Selling pressure is intensifying, and the volume is also intensifying. So again, same thing here. I think someone is scooping up these shares. My guess on LHDX. I'm going to add this one to my watches as well because it kind of fits that weird manipulation kind of feel, right? Where you got some weird action, new lows, higher volume coming in. Traded about on Friday 1.3 million shares. New lows. I want to see it maybe hold a level, and if it does, that could be an indication to grab it and have a stop loss right below. Cheapy, another cheapy. WSIA, what's WSIA? WISA looks interesting, cheap, big volume. This one was a name that ran a long time back. I played it a couple times, I think, back over the years. Probably back in 2019 or maybe 2020. This chart looks horrible. I mean, just absolutely horrible. Right? But that offers opportunity at some point. Pretty big gap to fill back up to about 16 cents. So as it falls under 10 cents now, you're in again. You're in free fall mode. Want to check the float. Float, I'm seeing 40 million. Want to check on, let's take a look. That was almost the last of that list. Let me just go to Seeking Alpha to pull up the earnings. Let's go WSIA. PRs. Let's PRs. Closing of, they announced a close. This drop was an offering. They dropped this on an offering. This is an offering. They closed the offering. Okay, now that provides a gap back up, which gives us potential good upside targets. Let's see. To report third quarter earnings. Why is this the earnings? Huh. If you don't find them here, go to BAM SEC. BAM SEC, baby. Go to bamsec.com, pull it up, and then just type in the ticker name, and you can get all the filings. WSIA, go to... Oh, by the way, look at this. 2 funds. We'll check on that. 2 funds maybe buying some shares here. So someone's snagging shares. Could be due to the offering. Maybe. We'll see. Financials, quarter 3. Here we go. I'm going to go Command F and go cash. Let's find cash and cash equivalents. I think that's 2.6 million. 2.6 million, so they burned through a lot of cash. Not a ton of cash, to be honest with you. As of September 30th, which was why they did the offering. Makes sense. Now they did the offering. That's out the way. That's one of those things. Like if I get in here, right, now, of course, they did an offering, so now they've got $7 million, whatever the number is, of cash, right, additionally. If I come in here, they didn't do an offering recently, okay, and I'm seeing 2.6 million cash, and I saw that, hey, 9 months ago they had 13 million. They burnt a lot of cash in 9 months. That's sketch. I'm not going to touch that. There's no matter how good the chart looks, I don't care. The risk reward is not there for me. So that's one of those things you got to look for, and I always want to look for that, and that would have been a red flag in my view. It's just a straight up simple red flag. There's a lot of other things you look at, but that's just one of the simplest ways to find a red flag in terms of cash, in terms of offering risk. And hey, that was an offering. Now let's see what happens. Obviously, these things are in free fall mode until they're not. They are in free fall mode until they're not. So keep it on your list. I'm going to put it on mine. And we'll just kind of check back in every night. Just come check in and see how it looks, And if there's something that catches your eye, higher volume, a big wick, big time washout, then it gets your head spinning a little bit. Love the penny stock scans. I think they're really fun. They're fun because, again, this is a game because what you're trying to do, this is one of the things that, to be honest, I hated about the whole AMC, which, by the way, AMC is getting crushed here. We'll come back to that scan in just 1 second. I've got one more page to look through. The AMC new lows on the year, by the way. Why I hated this whole movement, great movement, right? The cause, I get it, right? But the reason why I hated it to a degree was because there's a game. It's a game. It plays with your emotions. It's a cycle. It's a battle. Psychology that is nuts, and they're just playing off human psychology. So if you're holding these penny stocks because it's the next, you got sold on it because you read some PR, you read some article, you read somebody on Twitter and stuff, which I would feel like now is a little bit dangerous, right? Especially with the whole Atlas getting crushed. No one's gonna be like pumping penny stocks anymore, right? No, they're gonna be very, very careful with what they say and how they word things, right? Because the penny stock pumps, you see how that stuff can kind of play out, and then most people end up going to jail. But that said, there's a game here that you can start to kind of unpack how to win this game. And you kind of have to be, and when it comes to some of these small caps, like it's almost like contrarian investing in a sense, to a degree, but you're looking for triggers. You're looking for those signs that there's games being played. So on some of these names, like there are signs here, stop loss hunts, washouts, and all of a sudden volume comes in. Like these are some signs that, oh, they just washed out retail. Now somebody loaded it. Here we go. This could be good upside. Like that's what you're looking for. Let me go back to this WSIA here. I'm going to pull it up on FinViz on a separate tab. WISA. Let's see. Scroll down on the bottom here, and you'll see that December 6th, we had some insider sells around 12 cents. CFO and a couple other insiders. What do we have here? We got Lind Global Macro Fund, 1.2 million shares. They own 1.8% of the stock, I guess, is what it looks like to me. 9.9% there. Okay. Lind Global Partners. Let's jump back to, what's this one? Intracoastal Capital from the 9th. 3.5 million shares that they own. So some pretty big positions, you would think, right here across some of these funds. So someone's been snagging something. Brett Moyer. Why does that sound? Yeah, Brett Moyer sold shares, it looks like. Yeah, these are all sells. These are insider sells here. On the 6th, this is the transaction date. On the 6th of December, they dumped. What price were we at here on WSIA? WISA. On the 6th of December, that was post-offering. They just dumped shares. Interesting. All right, back to that screener. Let's jump back to that screener. All right, we got to this page. Nothing like super catching my eye outside of this LHDX. Let's go to 3. The thing is, there's a lot more where that came from, to be honest, too, like across all different sectors. So it's not just biotech, healthcare. There's a lot more. PRPO, I don't know. The volume doesn't seem to be super aggressive yet at all. But yeah, it's showing you we're in washout phase. Here we go. SRZN. Look at this. That looks interesting, as well as PHGE looks interesting. QTNT, super cheapy, but really high volume as of late. VVOS. Oh, there's a lot on this list here. Let's just go one by one here. Okay. I'm going to start from the top and go down. Nothing super catching my eye. This PHGE. Let's check it out. Check out this chart. PHGE and go to the, oh yeah. I mean, it's got a big bounce off of those lows. It's already up like almost 100% off the lows. But if it pulls back, could be interesting. It got some good volume though, past couple days. Not necessarily something I want to put on the watch list because it's bounced back. It's bounced a lot off those lows. Now, of course, it could go a lot more, but it's already bounced from low to high at about 100%. So I'm going to just leave that alone on that one. But keep it on the radar. You can always come back to it and watch it. See how it handles the next couple of days. QTNT. Let's see. QTNT. Yeah, here's one that I like to maybe have on the radar here, more specifically. Did a split right here. One for 40. Jesus. And that's gotten absolutely just annihilated since. I mean, that's in like a month. Month and almost about 2 months. 2 months. 2 months. The thing goes from 525 roughly, okay, to now it's down 95% in 2 months. And the thing was bleeding off for the prior, 9 months before that. So that's crushing blow. However, again, same deal. Volume's coming in. Someone's peeking in some shares. This can be a great spiking candidate for a move 100, 200%. So I want to see it build a base at some point, ideally, but I'm adding it to the watch list. And then, of course, the chart has to make sense. Then you back your way into looking a little bit into fundamentals. I don't look too much into fundamentals. I'll be honest. I don't really care too much, although I need to make sure that my risk is minimized based on the cash position, right? And you can go a little bit further than that, but based off of cash, number one is like my number one thing. SRZN. SRZN. Let's see. Yeah. Oh, yeah. This is another one. Because what the hell is that? What the hell is this? Like, what the hell is that? Random, out of nowhere, high volume. Like, super high volume for, like, no reason at all. Like, maybe there is a reason. Maybe we can go back and look at the PRs. But out of nowhere. Comes out of nowhere. Like, this thing got crushed from $2, broke 2, boom. Fell back under 50 cents, like, in, like, 2 months. Now, all of a sudden, out of nowhere, the thing was trading back in October, 4,000 shares, 11,000 shares a day, 23,000 shares a day, like on average. And that was like back in this span right here when it was kind of just chilling. Why out of nowhere is it trading on the 14th, 2.9 million shares, 9 million shares on the 15th, 2.9 million shares the next day, and then 3.7 today? Why? Something's going on. Someone's grabbing shares. Someone's accumulating this thing. And based off of that and the stock not moving out, it's moving, right? But based off some of these big wicks up and down, that reminds me of Grill. That tells me there's something going on. And of course, again, you have to be careful in terms of having that downside protection. But this looks like 34 cents. That is my stop loss, roughly. But my upside here is you're probably looking at 80 first targets and then $1, maybe even more. 50 SMAs, maybe a really good spot as well. So I'm adding this one to the list. That's a juicy one. Random, like super high volume, like out of nowhere on that. So that's one to have for tomorrow. What I'm probably going to do is most likely, we'll see what the market does. If SPY gets crushed tomorrow, we'll get maybe a little sketch, on this stuff. But these things are kind of doing their own thing anyway with SPY doing whatever it wants. So I'm not like super worried about it. But if SPY gets crushed, maybe I'll be a little bit more cautious here. We'll go to VVOS, this last one. But these could be like toss a very small chunk of change at 5 of these names. Build your little, like as people say, a basket of 5 that have these really interesting setups. Set your alerts for, a new low. If it hits the new low and you look at the chart, you're like, it didn't seem to pan out. I'm going to get out. And the volume's like, falling back off or something just doesn't look right. Just get out, right? And you just need 2 or 3 of them to make decent moves out of the 5 that have these setups to make it all, to make that little basket trade worth it, right? That's all you need. Because we're talking, big time upside with, of course, there's downside here, and it could be 10, 20, 30% sometimes. But the upside is 50, 60, 100, 200%, maybe more, depending upon, if it gets news and whatever. So let's look at VVOS and we'll wrap things up. Let's see. Vivos. Oh, yeah, I'm not interested now. Has earnings coming up as well. So that's sketch tomorrow, it looks like. That's not something I'm interested in. The thing went from 34 cents to 54 today. Now it's at 44. But again, same kind of idea here, same kind of concept is that it had this nothing super aggressive, but it had some higher volume leading up to building a base around 35 and then having a big day. So same idea generally. All right. WSIR on the watch list, pretty sketchy. Let's look at that. Then we'll go back to some larges and pull up futures, and then we'll kind of call it a night here. WISR. Ticker didn't pull up unless it's spelled wrong. GREE. This is one I remember playing this. I feel like I remember this name a lot. Yeah, similar idea here, right? The high volume today, very high volume today. I'm going to add it to the list. Add her to the list. Something's going on there. Came down to 25 cents. Held that. Bounced. Exxon. Looks like a chart I'll be watching closely. Huge chart. Yeah. I like... Back to large caps here, and we'll talk futures, which, by the way, is this accurate? Oh, we haven't hit a... Oh, I gotta adjust these times, but let me check on SPY. Where's SPY at, right? Or where did SPY close the after hours at? Where did SPY close after hours? It popped to 380 or so. ExxonMobil, and we'll pull up futures in just 1 second. ExxonMobil, daily chart. I like this a lot. I really do. Oh, yeah. I'm going to check out oil in a second. I like it a lot, especially after that pop to that 50 SMA, came up into the wicks that we had right back in here, rejected pretty nicely. oh man, this thing has I think moves sub $100 easily at some point. Again, if the market just kind of catches a bid and rips right into the end of the year, and oil stays elevated, right? It's probably not going to happen. But if we see weakness in the market, I think we saw the writing on the wall, this big breakdown, like early last week or whatever it was, 2 weeks ago, late week and a half ago, when we started seeing some of these oil names, energy names getting some hits. Finally, the strength was kind of fading off, and I think reality is starting to set in for a lot of people in terms of this whole oil trade BS, where like everyone was saying oil's going to $1 million, right? Like 6 months ago, and now they're like, wait a second, it's not. So that's recession fears, whatever. That's going to probably bring us down, especially if we need to see something happen here in terms of like ExxonMobil. If you overlay oil, here's crude oil. I mean, check this out. Check out this overlay. Like, what the hell is this? They're not doing the same thing. Like, we have seen a massive divergence here where oil's come down, and Exxon's starting to come down a little bit, but like generally speaking, it's up a lot. It's up a lot over the past couple of months, and oil is not. So that is losing that correlation right there. My guess is either oil's got to come up a lot or Exxon's got to come down a lot, or a mix of the two, which maybe is more realistic, and we kind of meet somewhere in the middle. I don't know exactly where. That might not mean Exxon's going to sub 90, but it could. So I like that idea, and I think that's a very valid stock to have on the downside watch for the next couple of weeks. At a minimum, I'm just watching oil, right? Bouncing back up at oil here. If it can't break back up over like 77 now, it's just doing the same thing. It's kind of making these lower highs and falling off to lower lows. It's just the way it's been. Here we go. Here's futures. I got to adjust those, but here's futures. It's actually bouncing up a little bit, up 0.23% right now. We hit down towards that 30, we didn't hit 3,800 specifically. We got close. SPY hit 380 and went below. Futures hit 38.25 roughly, and then now we're back up to 38.50 something. So we'll see what happens. I think we can get a nice push back up. It's gonna have a key spot right here though. Key spot to break through right here on futures. It's got to get back over 38.60. If you want more upside, we shall see. We shall see. But that's the deal. Futures green for now, kind of bouncing. Nothing big. I have the VIX short swing, but not huge size. And I'm looking for not new lows on the VIX. I'm looking for either the VIX is going to do, let me pull the VIX. Either I'm going to get stopped out and the VIX is going to spike back up over 2250, essentially like right here. Oh, sorry. This is today. We go to the daily chart, not 24-ish, 2385. It's like 24. Or we're going to get a push down into the 19s again. And I'm looking to take profits into there, or I'm going to cut my loss above here. Simple as that. That's all I have. It's just shares. It's nothing big. So that's the only thing I'm holding into the end of the year, ideally, depending on how long it takes to either hit one of those targets. And that's the plan. Outside of that, it's just day trades and what we see off the short term. Maybe worth a hedge if a hedge against some of the miners could be a good hedge of shorting some of them, playing some inverse ETFs maybe to hedge the downside there, because the dollar looks like it wants to break out for more. We'll see what happens on DXY, but we shall see. Keep searching. We can find another grill. I think so. I think that, and now, of course, we threw out a bunch of charts, right, tonight in small cap land, like we did. So it's going to be easy to look back and say, oh, look at those two that went, 100%. And I don't give a crap about calling anything, right? But you'll see if you go back to like 2 or 3 weeks ago I think it was 2 Sundays ago, there was like 3 or 4, maybe 5 small caps. Out of those 5, like 3 went like 50 to 100% plus, like in the next week. And I wasn't in any, but like that's hot. That stuff is hot right now. It's kind of working. So keep that in mind in small cap land. It's something, in my view, that it's not something to worry about. It's not something to size heavily and get overly, antsy about. You take a very small amount of money, you pick a couple names, You check in on the charts, you put some alerts for downside. It's like, if it falls below here, I want to come back and check because I don't think I want to hold on to this thing if it goes lower. And that's it. You keep it as simple as that. And you set some sells, up 25, 50, 75, 100%. And if they hit in the after hours one day, or they hit off a PR, or if they hit randomly, you're sitting back like it's just, make a few bucks. Like, that's all it is. It's nothing crazy, but it's you try to keep it as stress-free as possible. And it's more so, if we get this move, great. If not, I don't care. I'm not tied to this crap. It's essentially going to zero anyway. Who cares, right? Oil stocks need to catch them on the downside. I agree. I think so. If oil catches a bit, I still feel like oil stocks will start falling. That would be pretty interesting, and that would probably, make the downside even more glorious, right? If oil starts catching a bid, and then oil stocks are getting hit. CAT, DE be the best shorts heading to recession. Look at CAT. I have CAT on my list, I think, here. I thought I did. Yeah, here it is. Caterpillar. Oh, yeah. It's just in this. It is just holding up in this consolidation right here. And it does not want to go. I have alerts set under 225 roughly, and then over this 240. Like, those are my spots. Like, I'm not going to try to chop around on this thing, but when one of those breaks, it provides probably a couple days of awesome opportunity down or up. Skeptical on the up, I would say, for sure with SPY here. But we'll see. We will see. With that said, though, I am going to wrap things up. I appreciate you guys for tuning in. It was about almost an hour and a half. So we got a lot of stuff covered, a lot of stocks. Hopefully, got a good watch list, a good radar to kind of play off of, and maybe some good ideas for the upcoming week. We shall see. And I will see you guys. What's tomorrow? Tomorrow's Tuesday. Probably Wednesday we'll do a stream for the after hours if you can catch it. I do want to do more of these at night because I know more people can kind of hang out in these, and this is kind of random tonight, but I know more people can kind of hang out on these later, or these like weeknight streams after work time and stuff like that. So I want to try to do more of these in the future. That said, thanks so much for watching. Links, resources, channel sponsor, Chart Prime linked up down below if you want to check them out. And I will see you guys in the next one.